October 29th, Saturday, 2022. Nathan from Queens, Ultimate Traders from Reddit, video 2, State of the Market. So, I'm sorry to say, the state of the market is horrible. Horrible. It is getting worse. It's worse now than it was 3 weeks ago. And we made the low about 3 weeks ago, and we're up on horrible news. What did we have? We had bad earnings from Microsoft, bad earnings from Amazon, bad earnings from Google, bad earnings from Meta, bad earnings from Snap, even Netflix, bad earnings. I don't care what the stock did. I don't care what the stock did. Those earnings were bad. They're not horrible. None of those were horrible. Snap growth 6%. You could say maybe it was horrible, or maybe you could say Meta was horrible, growing at 10%. But I wouldn't say that they're horrible, just bad. And the only large company that beat was Apple. The only large tech stock that beat was Apple. What did we have? We had a CPI of 8.3. We're going to have 0.75 hike this Wednesday coming. That's what, November 2nd. And then November 13th or 14th, we have another CPI. I expect the CPI still to be around 8. What is that going to do? Middle of December, I think we actually have one more CPI before they raise rates again. If we get another 0.75 hike, that's going to put Fed funds rate at 4.6, 4.7. That matters to us because we're trading stocks. When interest rates are going higher, earnings are coming down. And if earnings comes down, the PE in PE, that means the multiple has to go down a lot. The multiple has to go down a lot. After earnings this past week, I took down my estimates on S&P 500 to 211. 211 that they're going to earn. Now, other analysts have it like at 230. 231, it's too high. Too high. I mean, Exxon is doing great. A lot of the energy stocks, Caterpillar did great. Most of the stocks are not doing well. I don't know what they're trying to feed you on TV. This earnings is not good. Not good. But what's even worse, and the reason why I dropped this so low, because that's a big drop from 220 to 211, is the guidance was horrible. The guidance on Meta, horrible. Amazon, horrible. Snap took away guidance. Apple doesn't want to guide. They actually said that growth might be like 6 to 8%. They said in a light way, but it took off on Friday. It is what it is. But this is the state of the market. So we just had really bad CPI early on in the month. Well, not early on the month. I think, was that the 12th or 13th? Bad CPI. Higher than we thought. And then the market's just shrugging it off, bouncing off it. Same thing with these earnings. Earnings were so bad on Thursday that on Friday I decided that I wasn't going to trade anything unless the NASDAQ was down 200 and S&P was down 50. If it wasn't, I wasn't even trade. And then what did they do? I think the S&P closed up around 50. The NASDAQ closed up around 250, 300. That's not a good time. When there's a big disparity between reality and the stock market, that's not a good thing. That's a bad thing. That's a bad sign. To me, that's a bad sign. I've been trading forever. That is a terrible sign when things in the world are happening and it's really, really bad and the market is rallying. Not me. Some other people might say, whoa, we're bouncing off the lows on bad news. It's a great time to buy. Things are oversold. No, things are not oversold. How can something be oversold if we know earnings are coming down? How can it be oversold? I get that every single day. I hear people say that every day. I have traders on my trading team saying this is oversold, that is oversold, is it time to buy? How is that oversold? If a company was supposed to make $1 All right. And it's trading at $20. That's a 20 times PE ratio. If it goes down to $10, right? It was at 20. Now it goes down to $10, right? The P ratio is 10 because the earnings were $1. What if earnings goes down to 50 cents? So it divided in half. Then it's in scale. It's in scale. The P ratio is still 20. What does that mean? It means that even at 10, it's not too low. It's not too low. Now, if you want to buy something like Meta long term, or you want to buy something like Google long term, or Amazon long term, that's fine. Just don't track it daily, because I do believe over time they'll come back. But near term, short term, going to be a lot of pain. The way it's looking right now with earnings, I'm going to say the fourth quarter earnings are bad. I'm sorry, and that's why I took down the S&P from 220 to 211, and I'm still slapping on a 16x, which means I see like fair around 3,300, 3,500, and that's why I'm saying safe trade range 32 to 35, NASDAQ 9250 to 10,250. Whether we hit the lows, I don't know. But if we were to drop down to those levels on the low scale, then it's safe to buy. Then it's oversold based on the current data. So every single day we get data coming in. You know, we see gas prices, gold prices, the dollar, we see the yields. We have data coming in, and we have to interpret all that data into what we're going to do with stocks. All that data, what is it going to do to the companies? Are they going to make more? Are they going to make less? Foreign exchange killed Apple by like 8 or 9%. But that happens when interest rates rise. The cost of the dollar increases because rates are rising, and the value of the dollar increases. That's a whole reason why you raise interest rates, so that the supply of money goes down and the value of it goes down, because it's less supply. It's harder to get money. So that's what happens. So that's video 2.